markets, but I thought it would be interesting to compare an emerging market to a developed market. Olivier referenced Brazil. From 1995 through, including 4 forecast years to 2015, or 5 forecast years, according to J.D. Power, Brazil's compound annual growth in auto sales, so the amount of cars that people are buying in Brazil, goes up 7% a year. It's a powerful number. China goes up 15% a year. The United States, 0.5%. Essentially, it's not growing. There's no growth. People will come to Rwanda capital markets if they have faith in the capital markets. Investors seek growth markets like they seek water. You absolutely need it if you're going to generate returns for your clients over time and create wealth. And the final comparison I want to draw was South Africa, which is generally viewed as the leading market in Africa. It seemed like it could grow faster. And then it sort of dawned on me as I was jogging this afternoon, it doesn't matter why. From a Rwanda perspective, they're a competitor. The fact that they're not growing faster is great. It means that as your capital markets open up, people are going to see more relative opportunity here and want to come here. It also probably means that investors don't feel as safe putting capital into that market. So there is an opportunity in sub-Saharan Africa to have some specific things in a second. You have an opportunity to lead the world because your rate of growth won't be 3.4 to 3.1 global over this period of time. It's going to be something like 10%, 8%, 10% compared to global GDP, which is growing 3. You're going to outgrow by a factor of 3, and then within the growth industries in the country, you can grow by even much more than that. Opportunity is knocking. This chart looks a little bit like if you get your heart tested at the doctor, but what it does is it shows on a monthly basis should dictate how much debt you're willing to take on for the businesses that you start and for the capital controls on the banks. The U.S., really because of the thinking of Alan Greenspan, thought that over time, increasing levels of debt were not risky as long as they were sufficiently diversified. Well, the reality is that works for a period of time, and then you reach a tipping point where there's so much debt on the aggregate economy, you have a huge problem. Some economies didn't really suffer that much in the 2008-2009 time period. Australia, Canada, part of that's natural resources. China, nobody cared about commodities in March 2000 through March 2003. People thought central banks had it under control. I'll store value in my paper money. Well, something changed. Things got a little more volatile, and now there's a very clear positive trend through the last year and a half since we had the financial crisis where people realized, you know, it's good to be in business where what I'm making is a hard asset as opposed to necessarily being in an investment bank or somewhere where what I'm making is really more of a paper type asset. I'd rather own somebody that is making coffee or cotton or corn in the U.S. has become a very good business, wheat, a lot of the grains. These are all very popular right now. One of the most compelling bits of research that we did in preparation for tonight, and this was really after reading the documents that the CMAC has put together, and I practiced the pronunciation of this word all day long, and I know I'm going to get it wrong, but it's Braliwa. Is that right? Close? Okay. So it's a beverage company, and as I read about it, heard it described to me, I thought, this is Ambev. Braliwa has a very high market share of the local beverage market. It has not just, and if you compare that to Ambev, Ambev is the Brazilian equivalent. They have the Coca-Cola licenses for Brazil. They do alcoholic beverages. They do various forms of other athletic drinks. They have all the bottling networks. It's a very difficult thing to break the hold that Ambev has on some of these markets. And Ambev is very well run. Ambev came public at $10. Ambev today is $140. You don't have to have taken many years of math to realize that 140 over 10 is 14 times. It's only been public for 15 years. It's returned investors 14 times on their money for 15 years. Now, for some of that to investors on a yearly basis. So they're very well run. They're in a very good business. And this is the type of return and value creation, wealth creation that's available in a well-functioning capital market. The backdrop against which this happened for Ambev was a Brazil that had a terrific central banker, named, last name was Fraga, who came in and got inflation under control. People felt comfortable putting their money, is actually doing extremely well. And yet, the local officials that I talked to say that we have a long way to go. The standards here are absolute. The standards here are unwavering, and they're communicated by all the leadership that we've talked to. That's going to be very attractive to local investors and to international investors. They'll feel like that people have a stake in the capital markets functioning very well. The national ICT vision is very attractive. You don't have a natural advantage in terms of location for port, but the communications network that is being laid, the fiber backbone, I'll just give you an aside of the types of. You all will probably in the next 2 years switch from owning the mobile phones that you have with SMS to a phone that is powered by Google software called Android. And you may never need a PC, or you may need just a Google tablet, something similar to Apple, or you'll have an iPhone. And the reason is you will have the bandwidth to actually exchange just about anything you want on a mobile network. You'll be able to bypass the West's approach, which was dig a hole, lay copper, go to dial-up, go to something faster than dial-up, eventually go to fiber optics. You're already there. And so the potential that this creates, not just for your country, but to export and import megabits of data, which may seem like it's not tangible, is very tangible and is really a facilitator of commerce that's happening now. I do my banking on my iPhone. I haven't been to a physical branch in quite some time. The world has changed, and you now have the backbone to actually start to see some of that happen here. So the ICT vision, I think, suits the economy very well. It suits the mobility of the economy, and is something that I think will be very strong facilitator to attracting foreign capital. There's a lot of insider trading. Investors flee that country, and you see negative foreign direct investment numbers. The compliance discussion that I had with the CMAC people was very inspiring. The standards that are being set are absolute. The tolerance for this type of behavior will be zero. That is a market that investors will come to as the issues come and are opened up.